and welcome to Zee Commodity Capsule, a segment we have designed particularly to give an entire week of wrap-up in the global commodity markets. This particularly today, we are not just going to wrap up the entire week, but also the month, because April is coming on to an end and today happens to be the last working day, both for the domestic as well as the global commodity markets. So all in all, you can say we have had particularly choppy last few weeks, not just for non-agri but also for agri commodity markets. Starting with gold, muted performance as the week comes to an end. Not just the week, even if you consider the entire month of April, it has been divided into two. The first half where we saw really sharp gains happening, and in the second half it pared most of its gain. Now the month started off with a 61,399 record highs as far as MCX gold is concerned, but slowly and steadily we saw it fizzling out completely, and now as far as domestic markets are concerned, gold is clearly trading well below the 60,000 mark. So on a weekly basis, while it seems to have it's more set or likely to be ending the week on a very flattish kind of a note. Same is the case as far as the entire week is concerned. As far as international market is concerned, during the week, in fact during the mid-month, we saw it hovering near the record highs of $2,058. Now what are the factors that have kept gold largely range bound? First of all, a very sharp safe haven demand has come because of the risk-off mode, particularly in the developing nations like US and China, where the big demand is not coming in, and there are concerns regarding recession constantly pouring in because of their weak economic data. As far as US is concerned, we saw stronger than expected US inflation numbers. Labor market data also escalates the fear of Federal Reserve continuing its rate hike cycle. Dollar index, although it is set for second monthly drop, we have seen that it has been generally range bound, and constantly it kept pressurizing gold at some other point. So largely gold has had a muted performance if you consider the week as well as the month. Silver relatively has performed better when seen in front of gold. Silver will be facing or witnessing its second weekly drop, but 10% of monthly gains is clearly taking away this month as far as its performance is concerned. Consistent physical investment demands are pouring in, industrial fabrication demand is there, and also there has been a report by the Silver Institute which clearly states that silver is likely to face global supply deficits for some of the years, coming years. So this is likely to underpin the price outlook as far as silver is concerned. But this month has been abysmal for base metals, ferrous, non-ferrous metals alike. Copper faces 4% of monthly losses, and other metals, particularly zinc, has not been able to perform very well. It is trading near 21 months low, and so is the case with aluminium and nickel, which are not performing very well. Now what are the factors? Throughout April, if you see, copper prices have remained under pressure because of slow growth, economic growth. Numbers that have been coming in, they are constantly clouding the demand outlook. Aluminium, zinc, they are ending the week with 3 to 10% on the lower side in red. Chinese copper miner have recorded 15% YOY drop in the copper production, and same is the case with most of the miners across the globe. There are worries regarding higher US rates. Chinese demand is not coming back the way it was anticipated at the beginning of the year, and Chinese industrial firms, they are constantly registering shrinking profits. So these are some of the factors which are indicating that metals are yet to face some heat, because demand is not clearly coming in either from US or from China, which are the biggest consumers of metals in the world. As far as crude is concerned, it's headed for second weekly drop. Brent is set to decline this week by 4%, and same is the case with WTI crude. And in the last 2 weeks, if you see, both these crude benchmarks are likely to lose about 9 to 10% of their gains. Now, weaker than expected GDP data is one of the reasons, and concerns regarding the interest rate hikes, not just by US Federal Reserve but also by ECB and Bank of England. These are primarily the factors why crude is facing some heat, and it has been seen trading broadly in $78 and $87 level. But this week has been particularly bad for most of the global agri commodities, barring sugar and coffee, which have performed phenomenally well. Sugar, if you see in global markets, it has registered 30% of monthly gains. Coffee has performed relatively well, and it is trading near 12-year highs. If you see Robusta coffee, Supply concerns are there, demand side is very strong. But on the other hand, if you look at grains, oilseeds, edible oils, cotton, they have not been able to perform. In fact, they are facing constant declines. If you see Malaysian palm oil, it is set for a second monthly decline. Prices are already trading near 6 to 7 month lows, and for the month, if you see, palm is on course of 8% of decline. Same is the case with CBOT soybean, which is trading near 6 month lows. If you see CBOT wheat, it is near 21 month lows. Corn has shed 8% of its gain. So all in all, this week has been very choppy, barring sugar and coffee, which have performed very well. Most of the commodities have had a pretty difficult time.